So hello, everybody. Thank you so much for joining. I am this guy. I'm so honored to be here with Jeff Booth. He is a visionary leader, lived at the forefront of a whole bunch of technologies, a whole bunch of startups, has been through a whole bunch of financial crises, understands so much about the world in which we are in today, and I want to pick his mind. He wrote a book called The Price of Tomorrow, and not only myself, but many people believe this is the book of the century. So if you don't have it, there'll be a link below, and please follow him on Twitter as well. And he's been published, interviewed by pretty much everybody on Earth. But I'm hoping we can extract a few nuggets from this man's brilliant mind. So, Jeff, how are you today?
Wow, I'm great. Thanks for having me, James. But I hope I live up to your introduction.
Oh, no. Well, I'm very honored to be with you because, first of all, we're kind of aligned in many ways. I do this to give back and help educate people to not only preserve wealth, but also grow it and manage risk. And I think you spend a lot of your time, your mission seems to be helping others wake up to what's going on in the world today. Is that fair to say?
Yeah, it's fair. It's fair to say. It's when you have everything you need, what do you do? And so and as an entrepreneur, typically what an entrepreneur does is try to innovate, to try to create value for other people. And so when I looked at this system level problem that we're talking about, and I was seeing no fixes for a system level problem and not people, I had to do something. But thank you.
So speaking of your book, so for the audience, I know many people will, hopefully most have read it. Those that haven't, they have to order it, and literally it will change the way you look at the world. But The Price of Tomorrow, could you summarize it for a 10-year-old in 2 to 3 sentences?
Sure. Technology makes everything cheaper. We live in a world that is designed differently and must make prices go up. And so you have two systems colliding against each other. In the existing system that we're in and we measure everything by, we can't see the other system. And so it provides, and if I expand on that a little bit more, so just about every problem in the world that we think is a problem is a derivative of that fight. Two systems fighting each other. And you have to ask yourself, is technology going to keep on reducing prices? Is it going to give you more? And what would the corresponding system do to try to stop that?
Yeah, I love that. Related to that, part of what's driving a lot of this is the whole area of exponentiality. And that's really hard to wrap your head around unless you sit and nearly meditate and think about it. So I know one of your favorite books is Exponential Organizations by Salim Ismail, but understanding exponentiality is not easy. I know people look at, the iPhone generations getting better and better, but one example that I heard from you in the past was kind of, we are in the 34th fold. Kind of everybody out there, if you imagine a napkin or a piece of paper being folded 4 times, it becomes, 1 centimeter thick. But doubling something 29 times beyond that, increases it by a factor of about 540 million. I hope I got some of these numbers right. But can you help people understand this exponentiality and how it relates to money in today's world?
So if we first start on, and remember, the 2 different systems that operate exactly diametrically opposed. So in the one system driven by technology, that exponential, that doubling, and if you fold a piece of paper on itself 50 times, it'll reach the sun. But in the early folds, it feels like nothing. It's a couple inches. And when people, and even people who are listening to this, once they hear the parlor trick, they'll think it's a parlor trick, and they'll go check on Google, is that true? And they'll tell their friends, and they will all think, now I understand exponentiality. And they don't, and I don't, because it's hard for our brains to wrap around that type of growth. Yet it's the world we live in, and it's moving at that speed. So if it's moving at that speed, and people are looking at artificial intelligence or self-driving cars and everything else, and they're looking backwards against the trend, looking forwards, it's doubling, and it's doubling again, and so if you think about how that connects to an inflationary monetary system, or how the way we work and everything else, we are very likely to miss it. Very likely to, and why most people miss technology. Most people missed the internet. Most people miss the iPhone compared to BlackBerry. Most people miss it, is because of the same thing. It's moving on this curve, and they can't project the future at that rate. And so, entrepreneurs are typically really good at this and timing this. But so you have in one system, you have a system that is giving that massive productivity to the world. Our podcast right now is essentially free to deliver this content to the world. Education's free as a byproduct. There's certification is not free, but and this is coming into every industry as it's driving as a base layer into industry, and it's moving faster and faster and faster, or exponential. But it's connected to a system that cannot allow that abundance to transfer broadly to us. Because if you allow deflation in an inflationary system, then the credit that the system is built on collapses, and you have a deflationary spiral, and what that deflationary spiral would wipe out all credit. So you have this paradox. On one hand, technology should be really good for us, and it should be saving our time everywhere, and we should be getting more for less. But the paradox is we're measuring it from a system that requires a system that we live in to grow forever. So that means more jobs, higher pay, and a transfer of wealth from middle class and poor to the rich. And then the transfer keeps going, and that transfer of power to government to make all decisions. That's kind of where we are in the system, caused by two systems colliding each other. And while it's easy to look at a system level problem and blame people like the Fed or anybody else in the system, if you yourself missed, if you didn't hold Apple, if you didn't hold Apple from the beginning to where it is now, or Amazon from $5 to where it is now, or you're making the same mistake, and you didn't hold those because you misunderstood what was happening with technology underneath. If you misunderstood, it's easy. We think we can, and everybody else can't. So why would it be any different for a central banker? Why would it be any different for anybody in an existing system that grew up an entire system and is measuring that system to misunderstand what's happening with technology? It's normal.
Yeah, that's you've brought me down a different path that I was going to take this. But it's always such a way you say so many profound things that are really hard to wrap your head around, but they trigger more questions. So let's double click into that whole deflation story. So technology drives deflation. Things get better, cheaper, faster, etc. Investing, whether it's money printing or people investing or whatever, chasing fewer goods, drives inflation. Now, Cathie Wood invests in disruption, and she's a big believer in deflation, but it's not happening at the rate she thought it would. So can you help us figure out this conundrum? And if you look at like her tech stock choices, they've gotten hammered this year so far because she placed the bet on deflation and deflationary forces. And I don't know if she's admitted it yet, but she hasn't seen the level of inflation that we actually have and live through today, which I see continuing. Like her and I agree on everything except for this one point.
This is, by the way, this is actually the problem that people get caught in, and they're measuring a time period that is too short. Yeah. And so just ask yourself to simplify that question, what would happen today if all governments around the world stopped easing?
Yeah, the GDP would tank immediately. Growth of GDP would tank,
and all credit would collapse.
Yeah,
and you would have a deflationary spiral that would be picking up speed, and it would accelerate until the kind of the laws of nature fell to the actual pace to what's actually happening today. So you have these two systems working against each other. One requires more and more stimulus on a greater curve, offsetting, what's happening to deflationary pressure underneath. But we don't see it because we're measuring from the system that's offsetting that deflation. So you have to ask yourself, remove the artificial stimulus, and what would the world look like? So that's what Cathie is saying. Now, double click on that. If you keep on artificially stimulating QE, you're actually robbing productivity from the market, because you're transferring to government, and government has to get bigger and bigger and bigger, and you're removing the free market. And it's subpar so there's less and less industry that can move. Also, because prices are being pushed up naturally, businesses must, even in a short term, you don't see it, even because supply chains get havoc and everything else, but businesses must, to compete, remove labor faster. So you have these two systems moving further and further apart. And what Cathie is missing is, and so the more you try to drive that inflationary environment, the more you're actually feeding the deflationary one. And then, and now the question is timing. The question is so today prices went up in the stock market. Why did they go up in the stock market? Is because China is easing to be able to save Evergrande and everything else that would be the cascading collapse. Yeah. And wherever the easing is in the world, it has to find itself back into the monetary system, no matter where. And so what's happening as a result of that, no matter where it is, we're measuring the system from the system. Mm. And you just, to be able to clear that in your mind, what would happen? What would the market look like without manipulation?
Exactly. So
deflation. And so what Cathie is essentially wrong or mistiming on is when this pushes up so high that it moves into deflationary environment anyways, or the only way to save the inflationary environment is to capture all control in government and keep going.
So again, you've prompted another question. So imagine if there was a deflationary world, would there be any incentive for people to spend? Because in a true deflationary world, what drives the economy if cash savings grow and purchasing power risk-free forever? Another conundrum.
So I love that question, because it starts to double click. Again, our brains don't hang on to concepts that we haven't seen before. It's new, it's novel, and what I'm saying is going to be really hard to hang on to, because you don't have a pattern developed in the world that hasn't reinforced on that pattern. It's like you hear every conversation in a room, even if you're just talking to me. Yep. But if somebody else does your name, you'll tune into their conversation. What this conversation is like is all the other conversations in the room until you've heard it enough times. Because so from that, will people purchase? Now, ask yourself that question. Would you purchase a new iPhone, even though that there's going to be a better one the next year? Of course you would. Would you purchase food if you know that there could be more food next year? Of course you would. Would you purchase a TV? Would you purchase just a whole bunch of things? Purchasing might go down, but it might go down because we'll buy the things we need more. But to believe that inflation is required for purchasing is essentially this. If you double click on that, the only reason I purchase is because somebody's stealing my money. It's insane. Productivity in the world, productive economy doesn't require theft. And so if you steal my money faster, I'll purchase more. That may be true today in the world we live in, from the system we live in today, because people, but even that is becoming less and less true, because the purchasing isn't going into things, it's going into assets that are destroying a productive economy to be able to capture, essentially save more purchasing power for later through assets.
Yeah, unbelievable. So let's, related to that, if you take the mathematical certainty. I've heard you saying these terms before. And when I look at the scenario of money printing, and talk about the Fed or central banks all over the world or China easing, there is that GDP tipping point. You probably heard about it before. I think it was from the World Bank, the 77% magic number. Basically, if an economy borrows more than 77% of GDP, they can't escape. There's no longer any escape philosophy to get out of that, because the servicing of that debt will eat away at the GDP. So what do you think about that? And is the only way, I think I know the answer to the question, is to keep on money printing and to keep the cost of debt servicing down, which means we live in a stage of perpetual low interest rates going forward from here with quantitative easing that's managed some way or another?
Again, this is why these are hard to see, is people don't think in systems. They think in individual parts of a system, and it's hard to see the whole system. So if you think about, let's go through the options today. So the options from central banking from the system globally. Door one, let the free market work. That would have a deflationary depression. And it wouldn't be the deflation I'm talking about in the book, where productivity is broadly transferred to society. It would be a debt deflation, like the Great Depression on steroids. But because the entire system is built on that debt, every bank would fail. There would be no food on shelves. And into that vacuum would rise dictators.
And that's the 280 over 70, the 280 trillion of debt servicing the global 70 trillion of GDP.
Exactly.
Yep.
So if you let that system, because it's based on credit, if you allow deflation, the credit explodes in value, or sorry, it explodes and you can never reservice that credit. So it gets wiped out. You have a credit crisis, but the system is credit and it keeps on unwinding. So people that think they have money in the bank, that's actually a credit instrument, the banks close, and it keeps on unwinding. So door number one, unfortunately, but that's where we are. Door number two is ease forever, but easing forever by lowering interest rates, pretending I'm going to raise them one day, but having to lower them again, even what's happening today, right? The head fakes on raising them, but having to lower them perpetually forever, because a credit must grow forever to protect an inflationary environment, which is exactly against the kind of where technology is going. By doing that, you transfer a whole bunch of wealth from the middle class and poor to the rich. And because there's way more middle class and poor number of people, they rise up against the rich or elect other people to be able to say it's the rich's fault to be able to do this. And you have a turning of society because the many outweigh the few. And what ends up happening is you change leaders in a system that must still manipulate money to protect the system, to make it worse, but they create a whole bunch of essentially us versus them through that system, which resets typically, if you look at the long arc of history, through revolution and war. Essentially, I get elected by turning one part of my population, the bigger part of my population, against the smaller part of my population. And then to stay elected, I need to create a bigger enemy outside of my gates. And so that's what these resets look like throughout kind of the long arc of history. But the problem is we've never had that type of reset with the weapons of destruction and where technology is going today. So, and that global conflict that would arise from that type of is a pretty scary thing to think of. And worse, we don't see it coming. I've said this often on a couple other podcasts, but it's really important. When you think about Hitler rising into power because of the same hyperinflationary environment that was created, and who he turned the population against, you can see kind of what happens throughout this cycle. But worse than that is we all believe our minds don't change, we're perfect. We understand the truth perfectly, but nobody else does. What ends up happening through that manipulation is people are turned against other people. And if you ask yourself, forget about Hitler, how did an entire population not stand up and do something about that when you created atrocities to other people? And then they either helped or stayed silent. And that is unfortunately human nature in a system that requires manipulation. We get manipulated. And so we will, some of these things have really profound implications for where the world's going, because when you have corruption and money, as a result of having corruption and money, you must have corruption everywhere in society. So those are door number one, door number two. And so what you have today is you have governments trying to run financial repression and inflate, so your real dollars are going down in value, and they're trying to hold you into a system to run that financial repression. In the, I think in the 40s, it worked for the US, but the US was a superpower at that time, and there wasn't another challenger. Today, when that's happening with China and the bank and everything else, and the type of global conflicts that are going to rise from that, it's not possible. Plus, you have Bitcoin that is an escape valve from that financial repression. So it's really hard to lock people into a currency. Why people don't see it is because they measure everything in the currency they're denominated in.
Exactly.
They buy more houses, they buy more everything else. And some people are getting so rich by that experiment. I leverage up, I buy more assets, that they don't see the next wave of this when revolution comes to take that asset back, or politicians take it back and distribute it.
Or they have no comprehension of a 15% hurdle rate, for example.
Exactly.
Yeah.
So they think they're getting richer, when in fact they're getting poorer and creating the divide of society. And a lot of those people think it's because of their brilliance that they're getting richer in real estate, and as rents are going up and you're pushing pain on more of society. And then those people in society go and elect people that say, I got an idea, let's do UBI. Right? And I'm going to push up prices higher and transfer more wealth, because where does the money come from in the first place? And so I'm going to pick your pocket more to give you a working wage to push prices up higher. So that's where we are in this system. And so there's only really those two doors, except say, and we can go into Bitcoin, but Bitcoin is the first time in history that we've had a third door.
So speaking of door number one and door number two, so when they talk about threatening tapering or raising interest rates, they're just playing with our heads, or will they reduce by 12.5% for a couple of months and then wait for an external event and then increase quantitative easing again?
Yeah. So again, when we get to these things and you're in all of this, the simplest thing to say, if you just don't, is all of this creates more instability in a system and more instability in us, because we're in that system. As we look around to try to figure out what's going on, your podcast is probably so valuable because you interview people on this, and so do other, and people are looking for what's going on, and is creating more and more instability. And people are, you've probably seen me say this, which snowflake causes the avalanche? And people are trying to measure which snowflake. And they're grasping at this and this, and they're all over the place. The simplest thing to say is the system demands more easing. That will create more instability in a system. And I don't know at what time brings the whole thing down. It could be anything. There's more and more snowflakes gathering all the time.
So you touched on UBI. I didn't expect to go down the UBI path, but do you believe it's a foregone conclusion?
I think if you just simply say there's more of them, more people being left out than today that are in the have-nots outnumber the haves, and the Fed will be merged with Treasury over time as rules change, because the many will elect people that will create a populist movement. That's highly likely all over the world.
And I noticed a very funny stat just yesterday that the percentage of GDP of external debt, total debt of USA and Canada is exactly the same percentage. Did you ever notice that? 141%.
I didn't notice that. No.
It's 141%. Is it rigged, or Canada and the US in cahoots right now? I just thought
if you think about it, it's Canada is a raw materials base. Most of the exports are raw materials. And you print money, then raw materials go up in relation.
Yeah. It's like I ran a scenario. I looked at some treasury numbers. I looked at the increase of household wealth, but since basically January 2020 and today, and you looked at the amount of quantitative easing, the 40% increase of the money supply, and that directly translated to increase in household wealth. The problem is only the top 1% get it. Right. It doesn't trickle down, and that's where we're stuck. So let's
because if you think about that too, and so inflation, the other side of the coin for inflation is wage deflation.
Yeah.
Right. So so if you have savings or you're working for wages, your real income is going down, and so no wonder and the more assets you have, the more of the transfer.
Exactly. Well, you touched on China as well. And China, as you know, has more US T-bills, treasury bills, than the US balance sheet. So, and China has started selling T-bills to other nations. Is there a concern China will become the dominant currency, especially with the digital yuan coming forward? What do you envision?
So I think it was in 2016, China realized that the U.S. wasn't going to pay back their loans. Essentially, you had vendor financing, and it was a decent trade. The U.S. To keep interest rates low, China bought U.S. currency bonds, because if interest rates went up at the time, then U.S. would have collapsed, and China would have subsequently collapsed too. Purchasing nation, exporting nation. And so, but about 2016, I think maybe 2015, China stopped buying the T-bills and said, wait, this is going to happen. Why don't we buy assets instead? Rare earth mines, all of the critical assets for the infrastructure build to the other side. Where do we get political gain, Belt and Road, and everything else? And where do we take this money and put it somewhere else so it can't be destroyed in value, but more so we have more control over the next phase of where this is going, which, when I said creates tensions, war machine, everything else, because that's effectively what it does. And so essentially US doing that faster, printing more money faster, drives this divide faster and faster and faster. Now, I do not believe that the world is going to switch to replace the US currency with the digital yuan. But I do believe certain people will. Yep. And that'll create these major polarized states that turn into world war.
Exactly. It's so funny. I did this in a video probably 2 or 3 months ago. I talked about World War III could be potentially, I don't want to alarm anybody out there, but could be potentially triggered by kind of a quasi-currency war. Those that force certain nation states around the world to use and embrace certain currencies will drive that war. For example, the activities of China and Africa right now, building railroads and mines, etc. They are clearly, the continent of Africa will be forced to go down the digital yuan route. And then the US reserve currency, but then there'll be a third currency. I hate to use the term currency for Bitcoin, but that will be Bitcoin. So there'll be US dollar, yuan, and Bitcoin. And those three will fight it out amongst themselves. Do you envision such a weird future?
Yeah, I do. To facilitate global trade, you have to have a measuring unit that isn't all over the map, or that is being manipulated. But today we have measuring units as being manipulated everywhere. Or here's, if you look back through the long arc of history, people say that a currency failure happens every, call it 80 years or 80 to 100 years today. And it used to happen over a much longer time period. Like, I mean, 2000 years ago, it took a lot longer. And why might that be? And I have a thesis on this, and it is the same thesis that's in my book. Technology has always been moving. It's always been a force for deflation, but it happened very slowly throughout time. And it's speeding up faster and faster. So the great turning that people talk about every 80 years, it's not necessarily every 80 years. It happens as a result of our personal need to believe we can get something, we can get more than we can actually get. So we'll vote people in. If somebody said, listen, I only have this much money to be able to pay for this services, we would never vote that person in. We'll vote for somebody in that will lie to us, hide that lie to inflation, and build a system on inflation on top of that, that the lie must get bigger and bigger, tied greater expanding services that do everything what we're talking. And then it gets into a long debt cycle that has to reset. So that if you look at through the historic lens, I think that's actually what's happening. And technology has been moving faster and faster all the time, even going back to Roman days, right? And technology has been moving faster and faster. So you get these events, you get these clearing things. And now you wind that back to 1971, the US dollar probably would have failed in 1971 had they not tied energy to oil.
Yep.
Sorry, to US dollar to oil, which was energy. And because of the war machine to be able to Saudi Arabia and the pact, if you were outside of that oil for US dollar system, you were cut off from trade for the world. Look at what it looks like in Venezuela. Look at what it looks like in any country who's tried to get off that system. Look what happened in Iraq when Iraq talked about pricing oil in Europe. And so when you think about that system today, it extended US dollar dominance for another, call it 50 years, as it moved around, and it tied US dollars to energy in price of oil. Well, now China's a bigger player and can muscle in and price and try to price oil and raw materials in one, or they're trying, as well as the energy transition to Bitcoin. Bitcoin is pricing energy and is pricing the energy transition. And it's a more effective transition because it actually doesn't require the war machine to price it. So effectively what it says is all currencies break down at some point from the exact same thing that creates this. And why? Because the human loop in currencies, we want to believe that we can get something. We don't want to believe in inflation, but it's easy to believe in inflation, and it allows governments to spend more than they can, which has to accelerate.
Fantastic. Okay, let's play a game. So I built out this model actually in preparation for a Breedlove interview. So it looks at the money printing rate, money printing acceleration rate, and then it calculates a whole bunch of stuff like purchasing power, debasement, value of $1 million, value of a home, and all that type of stuff, and assumes Bitcoin appreciates at 33% per year. What do you think is the sustainable quantitative easing rate we will see going forward? We've seen 25% per year, 40% over 20 months, et cetera, et cetera. But what do you think the bare minimum is? And do you believe in the theory that it has to accelerate as we get bigger and bigger in terms of debt?
Absolutely. So from that, and I think there's a paragraph in my book that talks about this. If one system is moving down at an exponential rate, the technology is driving kind of what should be happening, then the system has to move up at an exponential rate. So if you look at money printing through that lens, and even the stats that I pulled out in my book, there was 185 trillion of debt in the preceding 20 years to increase global GDP by 46 trillion. you know that number has to keep on increasing global GDP, it has to be exponential in function. And so what are we seeing today? Remember, my book was written before all of this happened.
And that was a 4x at that time. So what is it now?
Yeah. So what is it now? And it's hard to even fathom.
Yeah.
And so at some point, winter is coming because it's completely unstable. And how the only way the system could continue this way, the only way is, and remember, because artificial intelligence and eventually effectively, one day artificial general intelligence, lower and lower costs on robotics, the merging of those two things and everything else, and the labor taking away of that. If you don't allow the natural force of technology through a currency that allows for deflation to move broadly to society, you must keep concentrating it in few hands. And if you just pull on that thread, what you have to think about is, who is the person, pick a person's face that you want as supreme leader of the world, or two or three of them fighting with each other for all control, because that's actually where if this system was able to essentially distort all pricing by continue to manipulate forever, that's where it goes. It concentrates more and more wealth in very few hands, and it looks like for everybody else like modern day slavery.
And we're seeing that with the Jeff Bezos and Elon Musks of the world and Google people. Like, you see the huge concentration of wealth tied directly to technology.
But then what happens from there is, because there's few, and here's the risk that they don't see. When there's very few of them that have the money, then it will likely be a political class or dictate that comes in and takes that and takes the business away, takes everything. Look at what's happening to China right now in the technology companies.
Yep. DD, etc. Yeah.
Yeah. You have to take back that power and concentrate it in government. You must, and the will of the people will give you that power to be able to do it. Change constitution, change all laws, give you more power to take away their individual rights and freedoms. And
so are we seeing a preview of the dystopian world right now playing out in China?
Absolutely. A digital yuan, or central bank digital currency, it is money disguised as surveillance. Yep. Or surveillance disguised as money. And so it is a full control state where you better toe the line. And remember, that line that you toe, that you might opt for in the beginning, can change unilaterally. You could get shut out of it unilaterally. Look at what's happened to Hong Kong.
And it's funny, I see that with the CBDC. It's almost like a nuclear arms race that I lived partway through when I was a young man. And I see the sovereign states rushing to deploy. And I don't care if it's Israel or someplace in Africa or China or you name it, the Bank of England, everybody wants their CBDC. Now, the question is, two questions. One, will that accelerate the rush to become your own sovereign bank yourself through Bitcoin? Or will people just be sucked into it and then it'll be that dystopian future that you see a la China?
My optimistic case, and what everybody in Bitcoin must think about as well. These moves are more powerful than we give them credit, and so it's because a whole bunch of people are locked into fear. And they can't, and once you're locked into fear and you believe it's somebody else's fault, you'll reinforce that narrative, and you'll move into hate, just first kind of despair, hate, and everything else, and you will be turned kind of into a pawn of the state. And it happens fairly easily. I wish it didn't, but it. So that system is doing that right now. I think about this. If everybody around the world that was marching against COVID, which is a natural response to what's kind of that has to happen, and it's a derivative of a lot of this. Forget COVID. I'm not being a conspiracy theorist with COVID, but the system must have more control. If everybody that was rising against COVID or global warming or anything else rose up and bought Bitcoin instead, they would have their individual rights and freedoms back, and we would be moving to a different system. Instead, they're standing up and giving more power to the system, because a lot of people in that system will say, we need to print more money to be able to hire police states to protect us from those people.
So if everybody was sovereign, they wouldn't protest. Is that what you're saying?
Yeah, so what they would realize is they actually have more power in the system change than they actually realize, because it defunds the government. The government doesn't have as much power, and that power comes from printing of money to be able to take the power from you. It comes from the exact very same thing. But if you think about human bias and what we think in systems, how many people are actually investigating what we're talking about at the root cause versus talking about all the symptoms and getting wound up against the system? Very few people are talking about it from a system. And so door 3, my hope on door 3, and what I do, why I'm happy to do these things, because it's so important for our kids' future and everything else, is door 3 is every single thing we live in today, including this phone, right? Including the technology we're using today, was an idea in somebody's mind first. Everything, including the system we live in. And if we believe that a system must be based on a fraud and inflation, if the greater majority believes that and reinforces that system, that's the system we'll live in. But if people walk to the other side, and that was what Bitcoin provides, is actually a different idea. It's a different system. And it's a system that I believe is based on truth, hope, and everything else. And as people start to imagine a new idea and what a future world could look like on that idea, we change. And so what's actually happening right now, and maybe you from my book and a whole bunch of other people and other people coming in, this idea, if you just measure the number of people growing in Bitcoin and the network effect on Bitcoin, this and the number of people now building to it, and the technology and what people don't see kind of that's coming, all of the innovation that's still to come, is people walking across the bridge, a new idea emerging, and people grabbing onto that idea, not because there's a marketing department behind Bitcoin, because the idea is so important. It's so important to transfer from one system to another system, and the existing system can't allow it, can't allow the transfer. So hopefully, as one system flails and makes it work, more people will start walking across the bridge to Bitcoin. And as they're walking across the bridge, they're actually paving the bridge for society to walk across the other side. You need a transmission mechanism from one side to the other, because the existing system can't give it. So I try to stay out of the rhetoric about it's a transmission mechanism, and it's a transmission mechanism like most technology is.
Yeah, interesting. Before we leave CBDCs, and then I'm going to talk about paving the bridge, because I like that analogy. I had an interview last week with Raoul Pal, and one of the things that stunned me from that interview was he saw a lot of benefits from CBDCs for society by personalizing monetary policy, and he saw that as a big plus. Can you tell me how you believe CBDCs are dangerous / bad for society?
So under the existing system, under the existing inflationary monetary system, CBDCs will be terrible for society, because it must distort money further and further take individual rights and freedoms from control. And it must, and it'll say, what they'll say is, we need to do it to protect your property rights from that evil China coming after you. That's what will likely happen in a bunch of, so again, from the system, there is no fix from the system without more distortion, more manipulation, more power control to the few from the many, and eventually kind of destroying what we know. There is no capital. When you distort money at this level, there is no free market. So I grew up in something that I believed was a free market, an entrepreneurial talent trying to deliver more value to other people. And you're only successful if you deliver more value. That is largely gone today. It's still, I have a hard time because I'm an entrepreneur and that's what I do, to say it's completely gone. There is ways to create value for other people and do very, very well. But largely we live in a system of corruption. It is greater and greater corruption that makes that thing harder.
I see that. Let me pause on that for a second. I saw a very surprising activity from the president of the United States. Not saying anything bad or getting political here, but he spoke publicly about how great General Motors as a car company is. Now, this is no ding against General Motors, but he completely ignored the elephant in the room, which is Tesla. Right. And I just thought that was so strange. And obviously, that could be construed as corruption, because he must hate Elon Musk for some reason, or the fact that he, what's the term, panders to the union workers.
Yeah.
And Tesla's not union. But would you construe that as kind of corruption within government?
So I have a hard time today, and this is where I'm not waffling on this conversation, but or on this question, but I have a hard time because the line is so blurred with who actually knows and who doesn't. But both right and left hand side of politics, what party would say we're going to stop printing? We're going to advise the Fed to stop printing, and no party would, because what I said, the entire deflationary spiral would take place, everything would collapse. I'm not even encouraging them to do that from the existing system, but no party would say that. In other words, every single thing at the root is based on, and we're all questioning, is it a free market union, all these other things, and the root is rotten. And everybody, so when you have corruption and money is just an arbitrary concept for our time. We don't want more money. We want what we think more money will buy us, more time. So when you destroy money, you destroy our time. And so what would society look like under those conditions? And what would society look like if the corruption of money had to grow at an exponential pace? You can see everything that has to happen out of that simple construct in a lens. So then you ask about, okay, what would Biden do on top of that? What would Trump do on top of that? It's just nonsense. It's just completely nonsense, because if they know, what would they say? And if they don't know, then again, it's such a deep problem, but people are focused on the symptoms.
Okay, excellent. Before we jump into Bitcoin, one final thing. I think I heard you touch on it before, and I'm fascinated by it. Again, the president of the United States said the infrastructure bill would be a deflationary force, which is completely ridiculous because of how much it costs. But we'll leave that. But the connection between spending, quantitative easing, and climate change, and the fact that we're talking about innovation and different systems, how do you mash all that together in your head? You said once, I think, that quantitative easing causes climate change, doesn't cure it.
Yeah, so inflation is climate change. And that's a hard concept to grasp, again, living into a system that requires us to grow forever. Just so simply, on a finite planet, can you grow forever by manipulating money? And what would it look like? So you would cause constraints everywhere, right? You'd cause exactly what we're saying, and you would cause people to need more jobs, more and more and more and more, and buy more and more things forever, all because you're manipulating money to be able to keep up with the prices that are being manipulated higher. So more and more people would be forced into this loop to keep prices rising forever, because otherwise the credit-based system collapses. That's the system we're in. I am on a whole bunch of technology boards, and I can tell you for sure, these technology companies in food, agriculture, everything else, a bunch of different technology companies that give us an abundance in food and agriculture that drastically reduce prices, give you more for less. Now, some of those aren't visible to everybody in the world yet. They're not, but they're coming. And they get better and better and better through technology, automation, AI, but they've already cracked the code. One of them has already cracked the code. It's much cheaper to localize lettuce, produce it locally without a supply chain, than it is to import lettuce from California or something like that. Already cracked it. Now AI, automation, everything that comes makes that cheaper and cheaper and cheaper, more quality, less cost on an exponential scale. That's already happening. That is deflationary. So it gives you more for less, and it solves a whole bunch of your needs by doing so. Other companies very similar and I look around all of this stuff and I think every one of them, if they're successful, creates abundance, creates more for less, every single one of them. If they're not successful, they die. If they're successful by measurement of me, do I get more value here? Did the price come down and I get more quality? I'll buy it. And the business explodes because of that. Same reason you use Google, same reason we use this Zoom right now. Do I get more value? And it's all around and it's coming really fast. What would the existing system do to offset that when prices have to rise? Because those prices, the natural market wants to bring them down, give you more for less. And the system that we live in, because we want our price, we want lower grocery prices, but we want our house price to always rise.
Yep.
And it's the incongruence of thought between those two different systems that existing system must essentially steal that productivity by printing money and transferring that money to government or to big business or to technology companies that use it to scale faster and faster and faster. But they must keep doing it faster and faster. And as the prices rise up, more companies need to be technology companies and remove labor faster. So when you think about it from a system problem, how do you solve climate change through a system that requires growth forever and will manipulate prices to get there?
You can't.
It's impossible.
Yeah.
It's impossible, but people don't see it through a system lens. They see it as one part of a system.
I remember you did a presentation, I think it may have been in Europe or somewhere, but there was a slide and it was a goldfish in a bowl. And that's the system. And I love that because I could relate to that. And you can imagine one system with one goldfish in a bowl and maybe another goldfish in another bowl, two separate systems that have no idea what's going on in each other's systems. So I think that's where you're coming from. Okay, let's switch gears. Let's talk. You have this unique ability to connect dots from money to Bitcoin. This is what everyone's here all about Bitcoin. So how many dots are there for us to get to hyper Bitcoinization?
We talked about some of them already, that bridge.
Yeah.
And I personally think it's in Bitcoin, it's more of an emergent phenomenon. In other words, our minds believing in something and then creating that to happen. And as that's happening, more and more minds starting to wake up out of the fog, move out of the goldfish bowl, and realize, oh, I didn't understand this. And so how many dots there are to connect to Bitcoin? You could come in from the technology road. You could come in from game theory. You could come in from it's the only thing to solve climate change. It's the only way to solve climate change. You could come in from every different path. But what's happening, and I use you as an example, the really, really smart people that are taking this message and they're moving it out, and more people connecting. And you know the kind of the saying in Bitcoin, don't trust, verify.
Yep.
And I have not yet seen anything in Bitcoin that is a counter to that would give me reason for pause in Bitcoin. So there's no FUD, there's no anything else that doesn't actually make my conviction stronger in Bitcoin. And I'm not saying that to say maybe there's not something else that I haven't seen today, or I'm not open to possibilities of something else solving this bridge to the other side. But there's nothing I've seen. today that solves this. And so most of the conversations, so when you're verifying that at this level, and you have really curious, driven people to be able to hold that truth out, it gets stronger and stronger and stronger, and nothing that attacks it makes it stronger. So China removing mining capacity, and 3 months later you have more hash rate on Bitcoin network, is evidence for what happens with this network, and it's
indestructible. So I'll throw you a curveball actually on that one. So if you look at the top 1% of Earth, they own 90% of wealth. So what incentive is there for them to put their money into Bitcoin and line the pockets of the early Bitcoin adopters? It seems like an undeserved wealth transfer.
So I love that question, because you have to solve it from a different standpoint. And the question is not what do we care about those people, because those people are enriched from a system that has negative externalities to the rest of the world. So it's not those people. What it is what you think about, and think about this from a monopoly. How does a monopoly protect their monopoly? And what happens when technology changes the rules? So let's just say the money monopoly. Money today costs a whole bunch of dollars to transfer. It's high network fees, everything else built on debt and corresponding banks and everything else, and this huge embedded cost into that system. And it requires this inflationary system to be able to continue to go, and everybody in that system, the closer you are to the money printer, the more wealth you gain. The further away, the more you lose. And now you have a technology that's lowered the access costs and opened to everybody. What was have there been other technologies that have lowered access costs?
Yes.
For the world, and what do they look like today? So let's look at what Google did versus television networks. You used to, if you had a monopoly in a business, you used to be able to crowd out new businesses because they couldn't afford to advertise on television, and everybody was watching the same channels at night. So you had an effective monopoly by control of the airwaves, by pricing other people out. Very hard as a new business to get into that. When Google came into town, I can tell you, because I built to Google really early, it was free traffic. And the lowered cost there. And did the giant advertisers advertise on Google? Nope. They didn't build to it. And so companies like mine exploded in growth because cost of communication, cost of advertising fell to the floor, raced in to be able to create a new technology, and the world looked different as a result. And the laggers to that system were the big monopoly powers. And a lot of those laggards aren't even in business today.
Yep.
Right. So you created and what happened? Technology lowered the access cost. Technology opened the doors. It created a level field, and it changed the rules for the monopoly. And the monopoly couldn't deal with the change because they were protected by the rules of the old system. Now the only difference right now is that's happening to money, which is a meta level across everything else. So creative destruction is coming for money.
So putting it another way, if you snooze, you lose. It's like the game theory of Bitcoin. You got to get in early.
And you can get in any time, but the corresponding benefit will be less later on. And so same thing on who were the first people on Amazon shelves. They weren't the people that had access to Walmart shelves. They were, and because there's way more people that are underprivileged from an existing monopoly, and especially today as the monopoly of power and money gets concentrated more and more, there's way more people that are underprivileged from that. And that access moves. And what that access does from the bottom up is drives innovation, and more innovation across the new network creates the network effect that brings more and more people on essentially the road across to the other side. Yep. So now zooming back out, it's no surprise that a country like El Salvador would go first, because their negative externality of what their economy looks like is our positive externality.
the Western Union's taking 40%, etc. So
not just that, but we have a finance system, and Greg Foss talks about this. You can get a credit card rate as a business for 2%. You can't do that in El Salvador. That credit card rate as a business might be 8 or 10%. And so the walls, that gate to control the monopoly, are so much higher. Now you take Bitcoin and it's 0.0002% or something like that, is essentially a fraction of a cost. Why wouldn't every business embed it? And
exactly.
You're reduced. And so as those businesses embed it, they build that network effect, and it gets stronger and stronger. And other countries look over and say, wow, what's going on in that economy? And they start embedding it. And but that's just the nature of technology. And it's very hard to see from the monopoly or the privilege. We in the Western world, we billionaires or multimillionaires are the privileged few. So it's very hard for those people to see what we're talking about, but that's what technology does all the time.
So do you see a potential scenario where Bitcoin could go to zero? And what would the probability be at this point in time? And I know the Lindy effect has, the network effect, et cetera, has made it better and stronger, more resilient. But is there anything that you believe could take it to zero?
I don't think so. Yeah, I think I'm getting more convinced that it's inevitable that it keeps on taking kind of its moves across and consumes every asset class over time, and it becomes but no, I don't think anything takes it to zero.
So I remember 2020 started with a bang in terms of like treasury adoption, and then 2021 has kind of gone out with a whimper. Any idea as to why? Like, you got your Squares and your Teslas and your MicroStrategies all adopting it as a treasury asset, and 30, 40 other companies, but nobody else since then.
I think what you're going to find in behind the scenes is are a lot of people, a lot of boards. I'm on a bunch of boards. I can tell you this is a very regular conversation. And so I can imagine this is happening at a rate we might not see it because we're measuring in too slow and too high a time frame. We want it to happen right now. But I bet you going into 2021, nobody would have expected El Salvador to adopt it as a currency. Right?
Seems like seems like time frames are a theme. We need to, as humans, we need to wrap our heads around Lindian timeframes much better to be able to understand this exponentiality of this world we live in today.
Yeah, if you look at the on-chain metrics and you look at the rate of growth of, nothing's changed. Nothing has changed. It's accelerating. It's and if you and so is the technology that's coming into it. I've been asked a number of times, one specifically about $100 million fund to only invest in it. Would I join as an advisor to only invest in Bitcoin related companies and Lightning related companies? And there's entire network, there's entire ecosystem that's building there. So you can imagine what's happening. And that's one of many. And capital is rushing in because they see what's happening.
I've been watching the capital rushing in, and it's mind-blowing, the billions and billions. So that triggers another question in my mind. Do you think layer twos on Bitcoin have a shot of competing with the likes of Ethereum, Solana, Avalanche, etc.?
100%. That's in fact, I can't see. I got to be careful here. I'm totally okay in a free market of people investing in whatever they want in Ethereum and other altcoins. I can't see the long-term rationale for Ethereum at all. I can't see the long-term rationale for many of these. If people want to do day trade and see tons of risk in that too, but I think Bitcoin and the corresponding ecosystem is going to take it all.
One of the things that I deal with, and I come from kind of hedging futures derivatives background, do you believe there is a potential for a government or a series of entities like the JP Morgans of the world to try and suppress Bitcoin price over time, over long periods of time? Is it a legitimate
futures market? like through a futures market?
Yeah.
So yes, simply yes, but what would happen is, by doing so, people would see that they're doing that. And I think it would cause a crazy for a time, and then it would break because of what would happen.
Do you ever think there could come a time where, putting futures, leverage, manipulation, whale manipulation aside, that Bitcoin pricing and price discovery could ever go back to basic supply and demand?
That's what I think it will happen. That's
Okay.
what I hope. That's what I hope will happen. So there's a question a lot of people ask about. Okay, so what if we transferred the wealth from these people to these people? What would the society look like? So if you built a credit-based system on top of Bitcoin that looked a lot like the credit-based system today, yes, it would still, if you over leveraged, it would be wiped out to zero and there'd be no, but you can imagine, it is simple explanation. Think about just in mining. What if one company could concentrate because of the massive leverage, and they could essentially buy all the ASICs, and they could concentrate the network, right, as a result of that massive leverage. So today we're going to have a whole bunch of experiments and people trying leverage and everything else, and comparing one system that requires massive leverage and thinking the system will look the same on the other side. It won't. It's going to, if eventually people are going to pay in Bitcoin, and you want that to happen because it's actually the only way to transfer what I'm talking about with the technology to be able to create broad-based abundance. It's the only way to allow the free market to work.
Yeah. One of the things that keeps me awake at night is people that are dependent on the fiat system. I know a lot of people in their late 50s, 60s, they have maybe $300,000 in the bank, and that's their future. What happens, or are you concerned about people that don't have any Bitcoin? What happens to those people?
I'm very concerned. Yeah. In my one of my CEO groups, somebody said 3 years ago, he came to us and he implored us to buy it. Jeff never implores, right? I'm begging people, you must get off zero.
Get off zero, yeah.
Get off zero. Learn about it. Now, don't do it because I said so, but you should question your own bias, and you should get off zero, and look into this more. Getting off zero will at least put a foot in the door, and then you can make some decisions and everything else on how much you want to allocate and everything else. But it's a lifeboat in the coming storm.
Yeah.
And it's a much needed lifeboat in the coming storm. It's really important for people's family, everything else. More important, if people really understand it, they'll understand how they're walking across the bridge to actually take humanity to the other side.
Yeah. And speaking of that and that lifeboat, I've been watching the Case-Shiller Index now for nearly 30 years. I don't know if there's equivalent in Canada. That is north of 24% this year so far. Actually, north of 24%, I think, in the last 10 months. It's ridiculous, the actual real estate inflation. But what would you advise somebody that had neither Bitcoin or a house? How should they allocate? Should they have their castle first, or Bitcoin first and wait for the castle later, or vice versa?
I think today it's Bitcoin first. Yeah. I think it's the amount of leverage. When I think about specifically housing, now that's worked for a long time, and it's worked because of the inflationary policy. Like, nobody asks people that believe housing goes up forever, right? Think of what could happen to your mindset believing housing goes up forever in an environment that over the last 20 years, it took $185 trillion of the stimulus to make housing prices go up forever. And what might that look like if the stimulus is changed, or what might that look like if the stimulus keeps coming? But what would society look like? Now, in that environment, what ends up happening is people take a small down payment of their cash, and they take a small down payment because they're so worried that their cash is losing value. Houses prices are rising faster than their houses, which is a design of the system.
Yeah.
And so they're scared. And they need a house. So they take a small, and they lever everything to that house. And now they're trapped. Now they're have bills that they can't, and now they're trapped in a system that if there is any waiver, they are trapped. Their job has to be supported to the two jobs probably to be able to pay for that and everything else. And so, but because this is a different system and it's early in that new system, and it's early in the network effect, just ask yourself, where was the internet in 1997? That's where we are in Bitcoin. Most of this is coming. So I would start in Bitcoin, because I think Bitcoin will outperform every single asset class. Effectively, if you measure your world in Bitcoin, prices will fall forever.
So when you take your bridge analogy and we're paving the bridge for the world, we are 2.5% across that bridge right now.
Yeah. And it could get, and at some point it's going to accelerate.
All right.
But actually, that's probably the most important. If you kind of use a business analogy, this same thing happened with Amazon in 1999. Remember the dot-com bubbles and everything else, but Amazon was creating this bridge to a different model that was way more efficient. And everybody locked out of the system, joined Amazon's system, and it got better and better and better, and they added more products. But now imagine point in time, 1999, instead of imagine Amazon only sells books and toys and a couple other things, and every retail store collapses and you can't buy groceries. That's the problem with what people are making a mistake on in Bitcoin today. They're thinking, well, how could this be used as a currency? What would happen? Because they're thinking of a total collapse of one system and a system that is not yet ready for the transition.
Yeah.
But what is happening is that system is getting more and more bulletproof. More and more people are using it. It's gaining adoption, and more businesses are integrating it. And the UX is getting easier, and wallet adoption. And now you can have wallets on your phone with multi-sig. And so the entire ecosystem, every new person in that ecosystem, technology building that ecosystem is making it easier to use, which is the transition from one system to another. And so going early on that transition is important, but that's what's happening.
Beautiful. I know we've run really long. We're at the final part of the interview. Awesome. I call this the quick fire round, and I hope you got time for 6 very fast questions. Just they're like yes or no. So would you deem Bitcoin a zero coupon bond?
No.
Interesting. Okay. So, I always felt that crypto regulation is bullish for the market space. Your thoughts?
It is bullish for the marketplace.
Okay, excellent. Gary Gensler said there is Bitcoin and there is everything else. Do you agree? I think I know the answer to this one.
I agree.
If there is one thing that keeps you up at night regarding crypto, what is it?
Human nature to and specifically human nature to be able to divide people from a system. So how much people discount, even in Bitcoin, a system that corrupts people as a result, and what people will do in that system scares me.
Beautiful. One of your favorite sayings to me is, you said once, abundance of money means scarcity everywhere, and scarcity of money drives abundance everywhere. I didn't get the last piece, and I know some people don't, but I'd like to hear it in your words. I have a theory, but how would you explain the last piece of that?
So where technology is going, and so I try to simplify this, and the oxygen you breathe is free. Why is it free? Because it's abundant. Yeah. And essentially no entrepreneur can create value there because it's abundant. And so technology, what it does is it actually decreases the cost of production to its marginal cost. And that's a natural force. And the marginal cost of production is moving closer to zero all the time with artificial intelligence and energy and everything else that's coming. So that is the natural path which creates abundance everywhere. If you don't have scarcity in money, that abundance can't flow to society. It gets taken by the abundance in money, creating scarcity and everything else. So the money allows that the scarcity in money, Bitcoin in this case, allows that to happen for society.
Excellent. Okay. 2 last questions and a final fun question. So there's a ton of money is being invested in crypto. You and I both lived through the 1999 bubble and ensuing crash, etc. Do you see earmarks, telltale signs of any similarity here?
In crypto generally?
Yeah.
Absolutely. So but I see your earmarks, telltale signs of that everywhere. Can it go on a lot longer if there's more printing? Absolutely. What's actually happening is you're creating a whole bunch of people who know, like, think about all the young people are getting rich in this too. But what they're trying to do is they're trying to escape a system that they know is unjust, and they'll take huge bets and risk and everything else. And if they're on the right side of that bet, it looks like a casino. They'll win and they'll escape that system. But that's actually what's happening to society, and you can expect that to continue until it doesn't.
Yeah, like one of the crazy examples is Decentraland. It's valued at $5.25 million per user. Facebook is valued at $148 per user. Little mismatch there, perhaps.
Perhaps, yeah.
So, final serious question. This is a hard one. So, what is the one thing about Bitcoin that you believe in that few others do?
It's actually what we talked about, that scarcity and money drives prices down eventually to zero. In most industries. Because they're measuring a system from a system, so they can't see that. But that scarcity drives deflation, which provides abundance. And what it means is we don't have to work as much to be our time is saved. But that's a hard thing to grasp because people are so captured to we need more jobs.
Yeah, excellent. That was amazing. And that kind of relates to our fishbowl example too. System, timelines. So fun question. So if Jeff were to abdicate his throne of Bitcoin King of Canada, who would you nominate to rule in your stead?
Oh, there's so many good. There's Greg Foss. I'd have to say he's fantastic. Ben is great and pretty deep on this. I'll forget. I'm forgetting names right now, but those would be John Vallis. Those three would be among the top.
Well, we'd like you to stay in your throne if you can and keep up the brilliant work for society as a whole. Jeff, this has been an absolute honor. Any final question for me at all?
No, this has been an honor for me too. Thanks so much. It's been a lot of fun.
People really need to hear from you, and get off zero, everybody. Listen to the man that knows. Wonderful. Don't forget as well to follow Jeff on Twitter. And if you don't have a copy of his book, please get one. It's essential reading. It's the book of the century as far as I'm concerned. Thank you so much, Mr. Booth.
Thanks so much.
Okay.